What's going on, guys? Happy Friday. Welcome back to another market warm-up. If you guys are new here, my name is Hunter Chapman and I post videos on this channel every single morning to keep you updated with what's happening in the market and to show you how I'm positioning my portfolio in the short term. So those of you who have been following along for the week know that I came back to the short side a little bit early. We were wrong yesterday. Looks like we're going to be wrong on the open. It is what it is. We're not setting up for this tape. We're setting up for the next one, right? So yes, I do have a short bias, but that doesn't mean that we're short everything at every single price. So we'll get into what I'm going through on Monday. That was a great day to take up your shorts. That's when we were heavily shorting tech. Covering some on Wednesday into that into the Microsoft catalyst. We walked through that here with our subscribers. You cannot short and hold when there's a ton of catalysts on the board. Obviously, we had a ton this week. We had GDP yesterday. We're in the middle of earnings season, and we had Powell come out on, what was it? We have Wednesday and basically get rid of his guidance. We kind of walked through that a little bit. We're going to touch on that a little more today because there are more things, more signals developing, and that's kind of what we'll jump into. Actually, we'll start jumping into that right now. So the title of this video, the best stocks to buy in bear markets. I want to highlight some major changes that just came up as of yesterday on our US equities dashboard. So this is where we track all of the major sectors in the S&P 500. And we mentioned how earlier XLU, which is utilities, that flipped to bullish trend on our trend signal here. But that was really the only one. And now, as of today, we had healthcare flip back to bullish trend and consumer staples also flip back. And if we take here and we look at REITs, those are basically right on the line, pretty close to a shift back into a bullish regime from a volatility perspective. And the reason for that, the reason I want to highlight that, is those four sectors are the textbook bear market safe havens, right? Utilities, staples, healthcare, that is where investors will go, and that's where they'll start to funnel their money during times of uncertainty like this. So in my opinion, this just solidifies the fact that the bear market is becoming more obvious and investors are seeking that extra safe haven. You saw bonds started to work yesterday. The dollar obviously has still been very strong, but there's still things that you can own in bear markets, and it's clear that they're going back towards the classic, the low beta, the safer positions, the ones, the companies that everybody is using no matter what the economic environment is. So those are the names that we're going to be looking to be adding to on the long side when we do get those dips. It's definitely not the time to start buying growth stocks, tech stocks, high beta, retail, whatever it is. These are these positions that you want to be long. We have all of our separate list for consumer staples, utilities, and REITs as well that we send out every day to our subscribers. That gives us a look under the hood to see, what the strongest individual names within the sector are. So we track all of the trends and volatility ranges for all of those names. But that's what I wanted to highlight. I wanted to call out that there have been some shifts broadly, just looking more into the safe haven, into the classic bear market positions, but no changes to what we've been shorting. So like I've said, I've been actively looking to short tech. Another call out that I have here in relation to tech is the Nasdaq Volatility. So this is ticker VXN that you can track it through. And Nasdaq Volatility is still trending in a bullish regime. So when you have the volatility of any asset trending, you do not want to be long that corresponding asset class, right? So you don't want to be long tech. You don't want to be long the Nasdaq, whatever it is, when you have volatility that's continuing to trend. So even though we got a big counter trend bounce in tech stocks this week, I think the Nasdaq's up now 12, 13, maybe even a little more percent from its high, but we still have not seen volatility break down into a bearish regime where it is, where you're able to hold these tech stocks. So if we just look at the Nasdaq here and we look at the Qs, they're still bearish on our trend signal, and we have on the other side of that volatility that is still bullish. So for me, that is a clear sell signal. I'm going to be shorting tech again today. I don't care how much Apple is up in the pre-market. Let's take a look. Looks like it's back up towards 161. Until we get that big breakdown in Nasdaq volatility, or we get a breakout at least on my trend and momentum signal here for the Nasdaq, I'm going to be continuing to short that to lower highs. I also wanted to quickly touch on Powell's comments on Wednesday and kind of explain, we just walked through how the bear market is becoming more obvious from a sector perspective, just looking at where the money's going and kind of what's leading the S&P higher. But I think a lot of people are going to get caught in believing that this pivot is here, or that it really just is a pivot in general. Inflation, if you're just looking at CPI, is still 9.1%. He's basically just prolonging this move like he's going to. I think a lot of people are going to be surprised that he is going to have to continue raising rates, right? Like, unfortunately, he is now in a corner where inflation is going to run out of control unless he does something about it. So everyone is starting to price in that he's pivoting, that he's going to get more dovish here. But even if you look at, what's been happening just to inflationary assets this week, oil's back up close to $100 a barrel. Natural gas is now hitting new highs. I think it's up 50% or 60% in the last month. Corn and soybeans are both up 10% in a week. You know, the agriculture complex is moving back towards new highs. So the setup from an inflation perspective is still getting much worse. So if that continues to trend and inflation continues to go higher, you know, the Fed is already in a position where they have to do something about it. And now that investors have this new Fed pivot expectation and they think that they're going to be more dovish than expected, you know, I think there's a lot of room here for a surprise, and there's going to be a lot of uncertainty here moving forward around what the Fed's going to do. So now that they've gotten rid of their forward guidance, in the short term, a lot of this is also based on technicals, just based on positioning. And you can kind of see that. We walked through how the high short interest factor was the #1 performing basket of stocks. So it's a lot more short covering than actual buying. There is buying in those other sectors that we mentioned earlier. But still, you know, now there's a lot of room for a surprise increased rate hike, right? So if Powell comes out and does another 75 basis points at the next meeting, there's definitely a lot of downside that's going to be opening up in the market here. So I don't think that this inflation problem is going away. I personally do not think, you know, I'm not going to try to call market bottoms here, but I don't think that this bearish trend in the markets broadly is over. So I'm still actively trading it from the bear side, just with a short bias here. But I want to mention that, you know, don't get caught up in these short-term moves and think that inflation is suddenly under control. You have to be following these inflationary assets. So just follow, obviously, oil is probably the heaviest weight for anyone who is looking to track it from an asset market perspective. But you can see oil is moving back up, natural gas, all of the commodities are basically moving back towards where they were a couple months ago. So, you know, we're still in the same position. Powell really hasn't gotten himself out of this, and he's in a tough corner here. We're going to see how he reacts. But personally, I think there's a lot of room for him to surprise to the downside in terms of the market reaction. You know, bear market bounces are very common, especially when you have these slow grinds lower, right? You're going to be, when volatility is naturally high, you're going to get big moves in either direction. So when it sticks and when it trends, you're going to have huge moves to the downside. But then once everyone shorts on the way down, you're going to get those squeezes back up to lower highs. So, you know, in 2000, the average move was 15%, the average move up. The average move down was minus 18%. In 2008, the average move up was 12%. So these are the bear market bounces. The average move down there was 19%. And for the current market that we have right now, the average move up is 9%. So we're sitting right around there. The S&P is up, I think as of yesterday's close, 11.5% or so. And so it'll probably be up closer to 12.5 today. And then the average move is down minus 12%. So keep that in mind. These moves are very common. And even though there are some things opening up on the long side, some buying opportunities when we do get corrections, I don't think this bear market is over quite yet. So that's all I have for you guys today. But let me know your thoughts down in the comments below. I want to hear some other perspectives. And if you want me to go through anything, you know, next week, just let me know down in the comments section. If you like these videos, please do leave a thumbs up, subscribe to the channel, and I'll catch you guys back here on Monday. Peace.